For this session, we will talk about your audit reporting. So, what is the goal of the audit? So, at the end of the audit, the auditor shall form an opinion on the financial statements based on the evaluation of the conclusions drawn from the audit evidence obtained. Furthermore, aside from forming an opinion, they must express clearly that opinion through a written report, which is known as your audit report. So how do we form an opinion? Generally, first we obtain an evidence regarding the assertions of the management, and that assertions is about the economic actions and events pertaining to the entity. And now, the auditor will ascertain the degree of correspondence between the evidence on the assertions and also the PFRSs, which is the criteria, right? So the assertions, which will be based on the evidence, now you will check the evidence on those assertions. You now look into the degree of correspondence of those assertions with your established criteria, which is your PFRS. And ultimately, from that evaluation of the evidence, then we will now communicate the results to the intended users through your audit report. So you already know that's the goal of the audit pursuant to the definition of your auditing. Now, let's discuss the types of audit report. Generally, we have two. We have your unmodified and your modified. But under modified, we have qualified, adverse, and disclaimer. Let's start first with unqualified. So generally, what is presented in your or what is asserted by your management based on the FS is that the financial statements are presented and prepared properly using your PFRSs. So this is the evaluation and measurement. So based on your evaluation and measurement, the FS is presented based on the PFRSs, and ultimately the disclosures are proper pursuant to your PFRSs. So in an unqualified, it means that the financial statement are prepared in all material respects in accordance with the applicable financial reporting framework. So in short, it means that there's no departure in the PFRSS, particularly an evaluation and measurement, and also in your disclosures. So the common phrases used in your unqualified audit report is that it presents fairly in all material respects, and at the same time, it gives a true and fair view. So if that is the phrase, therefore the audit report is unqualified. Now, how about if ever it is qualified? It is qualified if ever FS are presented fairly except for. So if ever you will see an except for phrase, it means that the audit report is a qualified audit report. It is qualified because of something that is except for. Normally, that except for is not considered pervasive. When we say not pervasive, it is confined only to specific items or accounts. In short, it is not too material also or confined only to not substantial. So it is not pervasive because it is only pertaining to some elements, not all the items of the FS, and not substantial. Next, adverse. So if the report is adverse, it means that auditor does not know if the FS are presented fairly. But actually for adverse, it means that the auditor does not really think that the FS are presented, okay, fairly, not presented fairly. So what is the difference between adverse and disclaimer? In adverse, you still obtain sufficient and appropriate evidence. That's why you can provide an opinion. While in your disclaimer, there is normally a scope limitation. When we say scope limitation, it means that you don't have sufficient and appropriate evidence. And since there's a scope limitation, in short, you cannot do your audit. And since you cannot do your audit, you do not provide an opinion. So therefore, you do not know whether the FS are really presented fairly. So in disclaimer, you do not express a conclusion or opinion. Again, because of scope limitation, you cannot obtain enough evidence to reach a conclusion or an opinion. While in adverse, there is a sufficient and appropriate evidence, and based on that audit evidence, you determine that the FS are misstated. Okay? So what is the difference on the misstatement? In qualified, there is a misstatement, but there is only an except for. So when we say except for, it is not substantial. When we say in adverse opinion, the FS are misstated, it means that the misstatement is substantial. Therefore, we look into the pervasiveness as to qualified and adverse. So what differentiates therefore qualified and adverse is the degree of misstatement. So both are misstated, but in qualified, except for some items. In adverse, the FS really, in all material respect, is misstated. So if the FS are misstated, you look whether it is not pervasive or it is pervasive. When we say it is not pervasive, in short, it is not substantial. So if it's not substantial, you will see or you will make an audit report that is considered as qualified. But if ever the FS are misstated and it is pervasive, then it is adverse. Now, when can we say really that it is pervasive? We can say that the effect is pervasive if ever it is not confined to specific elements. Therefore, if ever it is confined to specific elements only, if specific elements only, it is considered not pervasive. But if not confined to specific elements, in short, mostly all items of the FS, all, almost all, almost all, therefore it is considered pervasive. If confined, it represent or could represent a substantial portion. So if ever it is substantial, it is considered pervasive. If unsubstantial or not substantial, then we say it is not pervasive. This talks about your evaluation and measurement criteria. How about as to your disclosure? When can we say that the disclosure effect is pervasive? If ever the disclosure that was omitted is fundamental to users' understanding, then it is considered pervasive, fundamental. If ever it is not fundamental for users' understanding, then it is considered not pervasive. Again, as a rule, generally in reporting, your auditor's responsibility is really to check as to the evaluation and measurement of the items in the FS and at the same time disclosure. So when can we say that the evaluation and measurement is considered pervasive or there's a problem into our misstatement? So if ever it is confined to almost all items on the FS, it is considered pervasive. It is not pervasive if purely specific elements. Again, if ever it is substantial effect on your evaluation and measurement over the FS, then it is considered pervasive. When it is not pervasive, if ever it is not substantial. How about as to disclosure? If ever the omission of your disclosure is fundamental in the understanding of the user, then it is considered pervasive. So when is it not pervasive? If ever it is not considered fundamental, therefore it is not considered pervasive. Why again? Because again, if there's a misstatement, what differentiates qualified from adverse is the pervasiveness. So there's already an error or a misstatement. So what you need to determine is the pervasiveness. If not pervasive, then qualified. You just place there except for a certain item. Kasi nga, sabi natin, pag not pervasive, it is purely specific, it is not substantial. But if ever it is pervasive, then make an adverse audit opinion. And in adverse audit opinion, you say that the full FS does not present fairly in all material respect in accordance to your PFRSS. So what differentiates again qualified and adverse as to your misstatement? Now, how about adverse and disclaimer? What differentiates it? It is the scope limitation. So, if ever you got the audit evidence, then you can provide an adverse opinion. If ever you see that the FS is really misstated, but if ever you do not have sufficient appropriate evidence, and you cannot really conduct your audit, therefore you cannot provide an opinion, then provide a disclaimer of opinion. So if there is a scope limitation and the scope is not really pervasive again, then qualified only. But if the scope limitation is pervasive, then disclaimer of opinion. When we say the pervasive, the effect is too big or too substantial that you cannot already create an opinion. Now, if ever it is a pervasive scope limitation, if that is a management imposed limitation, if the scope limitation is due to management imposed limitation, then the auditor can resign. Then the auditor can resign. So again, as to the types of audit report and qualified, you have sufficient appropriate evidence and you think that the FS is not misstated, or based on your appropriate evidence, you see that the FS is fairly presented, then unqualified. How about in qualified and adverse? You have sufficient appropriate evidence, and in qualified, there is a misstatement. However, the effect is not pervasive. Therefore, you just place an except for item. So in qualified, except for an item. In an adverse audit report, again, there's a misstatement. That is because upon looking into the different assertions and in your sufficient and appropriate audit evidence, the effect now is pervasive, then you provide an adverse opinion. But if ever there's a scope limitation and the scope limitation is too pervasive, then disclaimer of opinion. So those are your types of audit report. Now, let's look into the components of your audit report. These are the main components, especially if ever it is unmodified. We start first with the title. So the title normally is known as Independent Audit Report. So what is required under the PSAs is that you should indicate in the title that it is a report of an independent auditor. So there must be an independent audit report, or the term independent therein. Now, as to your addressee, to whom will you address it? If the client is a corporation, the addressee is the shareholders or the TCWG. Who is your TCWG again? Those charged with governance. So normally, where do you find those charged with governance again, if ever? That is a group corporation, or there's a parent subsidiary relationship. So normally there is an entity, or there is this so-called those charged with governance. If purely that is a corporation only, so the shareholders. Next, we have your partnership client. If the partnership is your client, then your addressee is the partners and the partnership, or the partnership itself. So it could be partners and the partnership, or the partnership. If that is an incorporated joint venture, the venturers, the proprietorship, proprietor itself. If ever the client now is a third party or outside party, you should address it to the engaging party. Now, after the addressee, the next component of your audit report is the opinion. So under your opinion, you must identify the entity whose SF or whose financial statement has been audited. That is important. Next, you state that the FS has been audited, of course. Identify the title of each statement comprising the FS. So it determines now what particular items of the FS was audited. Is it the whole complete set of financial statement, or certain financial statements only? Also, refer to the notes as to the summary of significant accounting policies, the date covered by each statement in the financial statement and the opinion formed on the financial statement. Next, we also have your basis for opinion. So after your opinion, we have your basis for opinion section. So under your basis for opinion section, you state that the audit was conducted pursuant to your Philippine standards on auditing. You refer the section that describe the auditor's responsibilities. So this determines now the responsibility of the auditor as to the assurance given, the materiality, the professional judgment, skepticism, and the audit process. Also, you include the statement regarding the independence of the auditor, state whether the audit evidence is sufficient and appropriate. Next, management responsibility. So what is the management responsibility? Generally, that the FS is prepared in accordance with the PFRS as to the evaluation and measurement. Also, the internal control of the management, the assessment of going concern, and your disclosures. So the main responsibility really is evaluation and measurement and disclosure. But also, since sometimes the audit is based on your internal control, so you have a control reliance approach, you also look into the internal control, the management use or is in effect in the operations of the business. At the same time, going concern is very important. You already finished going concern before in your completion or audit completion. Now, as to auditor's responsibility, so for auditor's responsibility, the main components are the objectives of the auditor, the level of assurance given, and you already know that the level of assurance is only up to reasonable assurance. Now, also include any causes of misstatements, only a definition of materiality, not exactly your materiality threshold, but the definition only, that the audit was exercised using professional judgment and professional skepticism, and a description of audit process and your procedures performed. Now, at the bottom part of your audit report, we have the name and signature. The name and signature, that is the auditor's report shall be signed. The auditor's report shall be signed. However, there are circumstances that the auditor does not include the name of the engagement partner because normally who is named in the audit report is the engagement partner. But again, there are instances that the engagement partner is not named. That is because there are some point that there is a likelihood as to a security threat on that engagement partner. In those cases that the engagement partner is not named due to security threat, that must be discussed with those charged with governance. Again, normally who is named, it is the engagement partner. Now, there are circumstances that the engagement partner is not named. That is due to security threat. So if there is a security threat, what is done is to communicate this one to those charged with governance, that the engagement partner will not be named, but it will be signed. What is required by the PSA is that the audit report is signed. So as to naming, you can withhold the same if ever there is a security threat. Now, for the auditor's address, what is needed is the name and the location in the jurisdiction where the auditor practices. And lastly, the date of the auditor report. So one is the date of the auditor's report. The date of the auditor's report is on or after the date which the auditor obtains sufficient and appropriate evidence. In short, it should not be earlier than the obtaining of sufficient and appropriate evidence. It could be on after you get all the sufficient and appropriate evidence or after the sufficient and appropriate evidence. So those are the normal items you can see in an audit report. But there are other paragraphs which can also be seen. And what are those other paragraphs? So those other paragraphs are normally known as your key audit matter paragraph, emphasis of a matter paragraph, and other matter paragraph. Later, we will discuss those other paragraphs that can be seen in an audit report. But before we proceed to those items, let's look into the differences on the audit report as to the basis and as to the opinion, those audit report that is considered modified, because generally these are the items of an unmodified opinion. How about if ever the report is considered modified? If the report is considered modified, then there is a difference. First, as to the opinion heading. For qualified, of course, we use qualified opinion instead of unqualified opinion. As to the content, always remember to start with except for. Normally, we place an except for, and we also have a basis. So basis for heading, we call it basis for qualified opinion, and the content is the description giving rise to the modification. Normally, there is a misstatement here, but it is not pervasive. Misstatement, not pervasive, then we consider it qualified. Furthermore, if there is a scope limitation and it is also not pervasive, then we can have qualified. Next, adverse opinion. What's the difference of this opinion with your unmodified opinion? So in adverse opinion, the heading is known as adverse opinion, and the content is that it does not present fairly. You already know that one. Now, for the basis for heading, we call it basis for adverse opinion. So in your basis for adverse opinion, you describe and quantify the misstatement. So the misstatement here should have been pervasive. The misstatement here should be pervasive. And also, you explain how disclosures are misstated if in case what is misstated is the disclosure. Next, you also describe any omitted information, especially if ever it is pervasive. So the basis here for adverse opinion, normally the contents is the pervasiveness and the material misstatement or the disclosure misstatement or any omission which is considered pervasive. How about in your disclaimer? So the heading here is known as disclaimer of opinion. And then the content is that you do not express an opinion. Now, as to the heading, we call it basis for disclaimer of opinion. So under basis for disclaimer of opinion, you start first by describing the reason for inability to obtain sufficient appropriate evidence. So in providing the reason for the disclaimer of opinion, of course, it protects the users from inappropriate reliance on the financial statement. Why? Because the FS, uh, we did not get any audit evidence, or if ever, there is a scope limitation. Therefore, we cannot really express an opinion. So to avoid anything on the disclaimer of opinion, take note that if ever there is a disclaimer of opinion, the effect is that there is a prohibition in providing COM or key audit matter paragraph and other information section. So normally, if ever there is already a disclaimer of opinion, there cannot be, so it is prohibited to provide the following: the key audit matter paragraph and at the same time other information section. Why? Because you did not obtain any audit evidence, and normally for key audit matter, you determine that there is a significant item. So it is of significant item. And when can you determine that it is of significant item? If there is an audit evidence. And since there is no audit evidence, therefore you cannot provide a key audit matter. So even if it is required, even if in the PSA it is required. So for example, the entity is listed. It is a listed entity. Therefore, there must be a key audit matter. However, you provided a disclaimer of opinion, meaning you did not get any sufficient and appropriate audit evidence, or there's no sufficient and appropriate audit evidence. Therefore, you don't have any significant matter to report. And since you don't have any significant matter to report, even if you are a listed entity, you will not provide COM or your key audit matter and other information section. Next, you should not refer to auditor's responsibility. You should not refer to auditor's responsibility. Again, let's recall. So what are the items on your auditor's responsibility? So first, you have your overall objectives, right? Next, level of assurance. So the level of assurance, you already know, reasonable assurance. Next, causes of misstatements. So normally, these are the items under auditor's responsibility. Aside from that, we also have your definition of materiality, professional judgment, and skepticism. And then lastly, the audit process and procedures. So normally, these are the items of your auditor's responsibility. So why is a disclaimer of opinion will not provide now, and it does not refer now to auditor's responsibility because again, you were not able to get sufficient appropriate evidence. Therefore, what will be changed now is that because of those matters, then you are not able to obtain sufficient appropriate audit evidence, and you just provide your auditor independence and other ethical responsibilities. Therefore, generally, you cannot provide any level of assurance. You cannot provide the causes of misstatement as to your audit process and procedure. Why? Because again, you do not have sufficient and appropriate audit evidence. Therefore, what should be placed now under audit responsibility for disclaimer of opinion? So, first, only that it is conducted using the PSA. Second, you did not get sufficient and appropriate audit evidence. Third, you just provide an indication of independence and your continuing of continuing disclosure regarding ethical responsibilities. So generally, you don't refer to the normal auditor's responsibility. Why? Again, because you were not able to obtain sufficient and appropriate audit evidence. Therefore, you cannot provide a level of assurance. You cannot look into the causes of misstatement, your judgment and skepticism, your audit process. So what will now be placed under your audit responsibilities? So you conducted the audit based on the PSA, that you did not obtain sufficient and appropriate audit evidence. And then lastly, that you still have auditor independence and you are still compliant with ethical responsibilities. Take note of that. So in a disclaimer of opinion, what is the effect? You will not have the same auditor's responsibilities. You will change the content of the auditor's responsibilities. What is now the content of the auditor's responsibilities? Those three items we just said. Lastly, you should not state that the evidence obtained is sufficient and appropriate. Why? Because in your basis for, take note, you are now telling that you did not obtain sufficient appropriate evidence. Therefore, you should not tell that you obtained a sufficient and appropriate evidence. So take note of this. Since in your basis for you describe that you did not obtain, therefore, you should not state that you obtained. Kaya nga ang sinabi natin, dito sa auditor's responsibility, you were not able to obtain sufficient appropriate audit evidence. So take note of those changes. Again, in your qualified, you will just provide there a basis for. So your basis for paragraph, you just describe what modified your audit report. And normally, that is the misstatement that is not considered pervasive. As to your adverse, you just provide there under your basis for the pervasive misstatement, or how pervasive is the misstatement on your disclosures, or how pervasive is the omitted information. In your disclaimer, in your basis for, always remember that you should describe there that you were unable to obtain sufficient appropriate audit evidence. And since there's no sufficient appropriate audit evidence, therefore, you are prohibited to provide key audit matter and other information section. Furthermore, your auditor's responsibilities will now change. Aside from the, instead of the normal, you will now have those three items as its content. Lastly, never ever place in your audit opinion or any items on your audit report that you have obtained a sufficient and appropriate audit evidence. Always tell that you have not obtained a sufficient and appropriate evidence. Now, let's look into the additional components in your audit report. So we already know the different types of audit reports. We already know the components of audit report. And if ever it is modified, what are the items to be modified in that audit report? So normally what is modified is the heading, also the opinion itself, the basis for, and the contents of the basis for. Now, aside from those items, we have your additional components or other paragraphs that can be found in your audit report. And what are those? We have your key audit matter paragraph or key audit matters. We also have your emphasis of a matter paragraph. And then we have your other matter paragraph. So let's start first with key audit matter. So in your key audit matter, it provides greater transparency as to the audit performed and selected based on whether they are the most significant in the audit of the SFS per the auditor's judgment. Take note again, there will be no key audit matter paragraph in a disclaimer of opinion. Why again? Because you cannot consider anything as significant because there is no sufficient appropriate evidence. Since there's no evidence, you cannot tell anything that is considered significant. So in key audit matter, the most significant. How about in an emphasis of a matter paragraph? So only based on your judgment that such matter is important for users' understanding. And for other matter paragraph, only relevant to users' understanding. So most significant, such importance, and relevant to users' understanding. So take note, aside from the normal contents, you provide here additional paragraph or separate paragraphs. That is to highlight specific matters. And what matters are highlighted under key audit matter? The most significant. How about in an emphasis of a matter? What does it highlight? Anything that is such considered as important in the understanding of the user over the FS. And in your other matter paragraph, only items relevant to users' understanding. So let's start first with a key audit matter paragraph. So under your key audit matter paragraph, so we said already these are the most significant in the audit of the FS. So when will we place a key audit matter paragraph? It is only required on audit of complete set of GPFS or General Purpose Financial Statement, General Purpose Financial Statement of listed entities. Take note, listed entities. Next, circumstances when the auditor decides to communicate key audit matter in the auditor's report or when the law or regulation requires key audit matter to be communicated. So those are the only instances wherein we must place a key audit matter. If it is listed entity and you audit the whole general purpose financial statement, and if ever you decide based on your judgment to communicate a key audit matter, or the law or regulation requires that the key audit matter must be communicated. Let's say, for example, you are auditing a bank, and in the audit of your bank, normally you look into the expected credit loss. For sure, the expected credit loss can be considered as a significant matter, especially banks rely mostly on their lending. So since they rely mostly on lending, you determine the credit loss, and credit loss for sure is a significant matter. So that significant matter can be placed under your key audit matter. Now, How will you determine those key audit matter? You determine those key audit matter from any matters that is communicated with your TCWG or those charged with governance. So the auditor will now communicate items to your TCWG. Normally, your TCWG here is known as your audit committee. Now, once your auditor communicated some items to your TCWG, you now look into those significant items. You look into those significant items. And how do you look into those significant items? If ever that particular item communicated as a high risk of material misstatement, if there is a high risk of material misstatement, or there is a significant risk of material misstatement, then it can be considered significant. Next, if ever it is based on purely management judgment, then it can be considered significant, such as your credit loss. Next, if the event is considered significant or the transaction is considered significant, then we can consider it is a significant item which was communicated to those charged with governance. Now, once you determine the significant item, you determine the most significant among them. So the most significant is based on the auditor's judgment. Again, take note, based on auditor's professional judgment, you determine the most significant. How do we determine the most significant? You determine it to those communications to those charged with governance. And based on those communications, we determine it as significant if ever what is communicated is with significant risk of material misstatement or high risk of material misstatement. Another, if ever that item communicated is reliant as to significant management judgment, just like in our example a while back, that is your expected credit loss. Next, if ever that particular communication is a significant transaction or event during the current period audit, then we can consider it significant. And among those items that you consider significant, you just pick the most significant. You just pick the most significant. So how do you communicate the key audit matter? So it is reported in the audit report under the key audit matters. So generally, what's happening here is that there is first the addressee, right? There's the addressee, and then there's now the opinion, and then the basis for the opinion, and then now after that you have now your key, sorry, key audit matters. So in your key audit matters, generally what is presented there are uh, why was the matter considered as the most significant and how did you address it? So normally you look into the matter that is considered significant, and then your basis, why is it considered significant, basis, why significant, and then lastly, how did you address that? So that is your audit response. Okay? So generally, you place a key audit matter paragraph, and that key audit matter normally is not presented if ever the law precludes public disclosure about the matter, if that audit matter is excluded. Next, if the matter has adverse consequences, that adverse consequences outweigh the public interest, and the auditor would require to modify the opinion as a result of the matter. Again, as a rule, key audit matter is required on these items. However, you do not communicate those key audit matter if any of the following is present. If the law itself precludes the disclosure about the key audit matter, if the key audit matter has adverse consequences, and then lastly, the key audit matter is proper to modify the opinion. So instead of placing it as a key audit matter, then you can just modify it. And how do we communicate it? So first, addressee, the opinion, the basis for the opinion, and then after that, you place now your key audit matter paragraph. And normally, you place the why the matter is significant, the basis, and the audit response. So let's look into that. So how do you report? So first, your heading. So our heading there is key audit matter. And then we place now your introductory paragraph. And normally, in your introductory paragraph, we provide the definition of a key audit matter. And then, what was it addressed? How was it addressed? So here, first we had here the definition, and then how these matters were addressed in the audit. Next, you reference it to the specific disclosure. So for example, our key audit matter a while back was impairment loss or the expected credit loss on the lending, okay? On the lending of the bank. So let's say that lending is in note blah blah. So you will place there the key audit matter is the ECL on lending, and you place the reference on the related disclosure on that ECL. So normally the ECL is placed based on your notes, kung anong note number niya doon, ilagay nyo. So halimbawa, note number 9 siya, di note 9. Ganun. Refer to note 9. And then, after that, you look into the auditor's consideration. What is that auditor's consideration again? Your basis, why did you consider it as a significant or the most significant item? So why does the matter consider to be of most significant? And then lastly, you provide the response. So there's already the risk, and then the response, the basis, and the response. And how do you document the key audit matter? So you just provide there the rationale. Why did you consider the key audit matter as the most significant? And how do you determine that there is no key audit matter or the rationale not to communicate the key audit matter? And when can we not communicate again the key audit matter? We do not communicate only if ever the law or regulation does not does not require the disclosure or does not want you to disclose that key audit matter. If ever, again, the key audit matter has adverse consequences. And then lastly, if the key audit matter is proper to modify instead the opinion. So we don't communicate the key audit matter in those cases. And if ever there is no key audit matter, in short, there is no most significant, then you just tell her why is there no most significant trees. And then lastly, if ever there is a most significant, then the rationale, why did you consider it as most significant? Again, the rationale is based on your professional judgment. So what is required only on your audit documentation is how did you arrive in that professional judgment? The rationale or the reason behind you consider it as the most significant, or the reason behind you determine there's no CAM, or the reason behind you did not communicate the key audit matter. And again, we already discussed when not to communicate the key audit matter. Okay, so that is your key audit matter paragraph. So again, we start first with the opinion itself, or the addressing opinion, basis for the opinion, and then now your key audit matter. And what can be seen under your key audit matter paragraph? The heading, the introductory paragraph, which contains the definition itself and the address items as a key audit matter. And you reference it to the disclosure of the key audit matter. So for example, our key audit matter is ECL. You reference it to the note disclosure on that ECL. As to auditor's consideration, why did you consider it as the most significant? And then lastly, your audit response, or also known as your how was the matter addressed in the audit. Now, since we finished already your key audit matter, our next paragraph is known as emphasis of a matter paragraph. So in an emphasis of a matter paragraph, again, this is not the most significant, but again, based on your judgment, it is important for the understanding over the FS. So when will we place an emphasis of a matter paragraph? So you place an emphasis of a matter paragraph if ever you are not required to modify the opinion. However, the matter also has not been determined to be a key audit matter. So if you cannot modify the opinion, then just place an emphasis of a matter paragraph. And normally, what are the items of an emphasis of a matter paragraph? So the circumstances wherein we place an emphasis of a matter is first, your going concern assumption. And you already understood before that we said if the going concern is appropriate, but there is a material uncertainty, then you consider placing an emphasis of a matter. Also in your litigation, we said if there is an uncertain outcome before, you can place an emphasis of a matter. If you will apply an accounting standard that is not yet considered applicable, meaning you have an early adoption of standard, then you can place there an emphasis of a matter. Also, subsequent discovery of facts, if ever after the date of the auditor's report, then you know about significant facts after the opinion was already issued, then you can provide a new or amended auditor's report. And in that new or amended auditor's report, you provide now an emphasis of a matter paragraph. Actually, these items was already discussed in your audit completion, if you still remember. Next, if the FS is considered special purpose financial statement, then you can provide an emphasis of a matter paragraph that it is really a special purpose financial statement. Also, if there is a major catastrophe which have now a significant effect on the financial position, which now requires a disclosure on the FS, then you can place an emphasis of a matter paragraph. So normally our mnemonic here is guess MC. Yes, MC. Going concern, uncertainty of litigation, early application of standard, subsequent discovery of facts, special purpose FS, and major catastrophe. Now, how will you report a emphasis of a matter paragraph? So again, you will start with a heading. So what is that heading? The emphasis of a matter paragraph. And then you reference the matter being emphasized on the related disclosure. So for example, you are emphasizing going concern, then you look into the note disclosure of a going concern. Or for example, litigation, you look into the disclosure relating to that litigation. And lastly, you place there the indication that the matter doesn't modify the opinion. However, since it is such important that the user must look into, so to properly understand the FS, you just place there an emphasis of a matter. So again, key audit matter, listed entities. Next, if ever you determine based on the circumstances that it is really a key audit matter, or the law requires to communicate that key audit matter. How about in emphasis of a matter, guess MC, going concern, uncertainty of litigation, early application of standards, subsequent discovery of facts, special purpose financial statements, and major catastrophe. So after emphasis of a matter, we go now on our last item, which can be presented in your FS, and that is in your audit report, and that is known as other matter paragraph. So what is an other matter paragraph? So it is not the most significant. It is not such important. However, it can be considered relevant in the understanding of the audit, the auditor's responsibility, and the auditor's report. So when can you place an other matter paragraph? So if ever it is not prohibited by law and the matter has not been determined to be a key audit matter. So when can we provide an other matter paragraph? First, on a comparative information. Next, if there is a restriction on the use of the report, then you can place there an other matter paragraph. Material inconsistency in other information, inability to withdraw from the engagement, subsequent discovery of facts, and reporting on more than one set of FS prepared using different frameworks. So later, we will discuss this comparative information and then material inconsistency and other information, while the others are already discussed in the previous topics for auditing theory. So later, what we will only discuss are those other informations or considered as information presented with financial statements. So you already know that your other information can be your supplementary information or your other info in your annual report. So later we will discuss those. And in your comparative information, you have your comparative financial statement and your corresponding figures. So later we will also discuss when will we place an other matter paragraph on these items. Now, let's look into your supplementary information. But before we go to your supplementary information, how does your independent auditor reports look like if ever we have now the different items? So you start first with the emphasis of a matter, and then we have your key audit matter, and then you can place there your other matter. So normally that is how it is placed in your audit report. You start first with emphasis of matter paragraph, and then key audit matter paragraph, and then your other matter paragraph. And you should know when will you place emphasis of key audit, and other matter. Do not forget the instances or the circumstances wherein we can provide those other paragraphs. Now let's look into supplementary information. So what is a supplementary information? We said there are other information presented together with the FS. And what are those? You have your supplementary information, and then we have your other information. So let's start first with supplementary information. So these are instances when the entity is required to disclose information which are not required by the standard or PFRSS. And when is there a requirement for supplementary information? First, requirement of the BAR in the audited FS accompanying the tax return. Next, requirement of the BSP on the audit of financial statement of banks. So those are supplementary information required by law. It is not required by PFRSS, but it is required by law. So what is the responsibility of the auditor with this supplementary information? So you consider whether the supplementary information is integral part or not an integral part. Why? We need to determine whether it is integral or not integral. Why? Because if it is integral, look into your audit procedures. You perform audit procedures over the supplementary information, whatever audit procedures that is, looking into the requirements provided by BAR and BSP. But if ever it is not integral, look into the requirement. You just evaluate as to the sufficiency and differentiation of that information with the FS. If ever it is integral, you really need to test it. You need to really test it. So you perform audit procedures. Now, if ever it is not integral, it is more as to your professional judgment whether it is sufficient and clearly differentiated from those items presented in your FS. So your audit procedures determine whether it is integral or not integral determines your audit procedure as to your supplementary information. So again, what is a supplementary information? An information not required to be presented by the PFRSS. However, you disclose them pursuant to the regulation or law. For example, FS on your tax return required by BIR, FS of banks required by BS. Now, how about other info? How about other info as information provided together with your FS? So other info, or these are financial or non-financial information other than the FS and auditor's report, which is included in an entity's annual report. So it is included in your annual report. So what is an annual report? Normally, it is a document or a combination of your documents, which is now provided in an annual basis by the management concerning information of the entity's operation and the financial results. So normally, they provide that annual report together with the FS and anything that is considered significant on the operations of the entity. So what is your responsibility as to this other information? So consider whether there is a material inconsistency between the other info and the FS, and then to respond appropriately if ever there is a material inconsistency, and to report in accordance with the PSA. So here we have an annual report, right? And in annual report, we include there the audited FS. Now, what we look here is that whether the audited FS provided in the annual report is the same with the audited FS that we have provided to the entity. Now, if ever it is not the same, then what could be done? So to determine whether the audited FS in the annual report is consistent with the audited FS we provided, we create now or we perform certain audit procedures. So what is your audit procedures? First, you need to discuss the annual report with the management. So discuss with management the annual report. After you discuss that, you obtain, of course, the annual report. Obtain the annual report. So that's the second one. After you obtain the annual report, of course, you need to read it. You read the annual report. And once you're done reading the annual report, you determine if there is an inconsistency. After you determine inconsistency, you consider the impact. Consider the impact. So that is your audit procedure. So again, there is an annual report which contains now your audited FS. And based on that annual report, we look whether the audited FS is consistent with what is provided in the annual report. And how do we audit that? You first look or obtain the annual report, you read the annual report, and determine whether there is inconsistency with the annual report and the audited FS, and look now into the impact of that particular inconsistency. Now, how do we respond to that material inconsistency? First, we determine if there is a material inconsistency or there is no material inconsistency. So first, before the report date, if the management is unwilling to make or correct the material inconsistency, then we have a qualified or adverse report. But if there is material inconsistency, but management is willing to amend the other information, then we place now an other matter paragraph. As we said earlier, under your other matter paragraph, if there is a material inconsistency in other information, we said we can provide an other matter paragraph. So in this case, there is material inconsistency. However, the management now is willing to amend the other information. Then you just release another matter paragraph relating to that material inconsistency. But what if after the report date, you just determine that there is material inconsistency? So you cannot already change your audit report, but here, it is done already after the report. So the material inconsistency was only determined after your audit report. Then you just notify or bring the material inconsistency to the users that the FS is uncorrected or there is a material inconsistency. Okay, so always remember that if ever there is material inconsistency, but there is willingness on the part of the entity to amend, there is now your other matter paragraph. But if ever they don't want to correct that material inconsistency, in short, there is now a material misstatement. You just determine regarding the material misstatement whether it is pervasive or not pervasive. If not too pervasive, then qualified. If pervasive, then adverse. Now, if ever the management refuses to make the revision, what is your audit steps? So you include the auditor's report, other matter paragraph. You either withhold the auditor's report, withdraw from the engagement, or seek advice from auditor's legal counsel. So aside from providing qualified or adverse audit opinion, you can do the same. You can provide it in your other matter paragraph. You can withhold your audit report. You can also withdraw, or you can seek advice from the auditor's legal counsel. But if ever you cannot do those items, then just provide a qualified or adverse opinion. But if ever it is corrected, then you just provide an unqualified plus other matter paragraph that the previous annual report provided contains material inconsistency. So that is your other information. Again, so we have information which is presented together with the FS. And what are those? Your supplementary information, which contains additional disclosure provided by your relevant regulations or laws. And then we also have your other information in the form of your annual report. Look into those effect or look into the effect of these items as to your audit report. Next, we look into your comparative information. So your comparative information can be comparative FS, as we said earlier, or a corresponding figure. So what is the difference? A comparative FS is purely for comparison. Therefore, auditor opinions refers to all the years. Hence, it should be obtained for all the years. For corresponding figure, it is integral part of the current period FS. But the auditor's opinion refer to current year only. So what you need to get is the management representation to current year FS. So in comparative FS, you are comparing the FS with the prior year. So here in your prior year, you need to get management representation on that prior year and management representation on the current year FS. Here in your corresponding figure, it is more of purely the current year only. Therefore, what you need to get is only a management representation on the current year. Here, the auditor's opinion will be based on the previous year and the current year. Here, the auditor's opinion will be based only on the current year. Why? Because under the rules, particularly in your SEC rules, if ever it is unlisted company, if unlisted company, what is required? At least 2-year comparative. At least 2-year comparative. How about if ever it is listed? If ever it is listed for SFP, it is 2-year comparative, while for income statement or statement of financial performance, what is required is a 3-year comparative. So since there is a requirement as to your comparative information, you need to determine whether it is a comparative FS or a corresponding figure. Why? Because now your audit opinion differs depending on whether the comparative info is comparative FS or corresponding figure. Take note, your audit opinion in comparative FS refers to the previous years and the current year, while in your corresponding figure, it only relates to the current year. So let's look into the audit reporting on comparative FS first. So if the opinion on prior year FS is different from the opinion on the current period FS, then consider providing an other matter paragraph. Why? Because again, we are providing an opinion on the previous year and the current year. So if there is a difference, then just provide an other matter paragraph. How about if the prior year was audited by a previous auditor, current year you audit it? So unless the previous year auditor's report is reissued with the current FS, you provide again an other matter paragraph that the comparative FS were audited by the previous auditor and the type of opinion issued with that comparative FS and the date of that report. So what does this mean? If your audit report now contains together the audit report of the previous auditor, then there is no other matter paragraph. But if the audit report now does not contain the audit report of the previous auditor, then you need an other matter paragraph. And what will you place in that other matter paragraph? That the previous year was audited by the previous auditor, and this is the type of opinion issued on that previous audit report or audit and the date of that report. Next, If the prior period FS is audited by previous auditor, but incoming auditor concludes that a material misstatement exists in the prior period. So take note, again, we are providing an opinion on prior year and the current year. If there is a material misstatement on the prior year based on your audit, then what you need to do is to communicate that to the management or the those charged with governance. And if the new auditor's report is issued on the prior period FS, then report only on the current period FS. So what do we mean by this? It means that there is now a new issuance of the prior year audit report. Therefore, you will just provide an audit report on the current year. So there's now an issued prior period FS audit report based on the material misstatement you have seen. So it was now corrected. So there's now a new audit report. You just provide now your audit report on the current year. How about if the prior year is unaudited? If it's unaudited, you provide again an other matter paragraph. Other matter paragraph. Do you still remember the items on our other matter paragraph? We included there material inconsistency and other information and comparative information. That's why you see here in your comparative information, purely it is more of an other matter paragraph. As to our report on the current year, it depends whether you can provide unqualified or any modified report, depending on the result of your audit. Next, how about in your audit report on corresponding figures? So here you have a corresponding figure. What did we say under your corresponding figure? You are just providing a report on the current year. So if the corresponding and current figures are fairly stated, unmodified. If corresponding figures are misstated but corrected, unmodified. If misstated but not corrected, then it is qualified or adverse. So you make a reference on the corresponding figure which remain to be uncorrected. If the corresponding figures are fairly stated and audited by previous auditor, again, other matter paragraph. And what will you include in those other matter paragraph? That it was audited by a previous auditor, the type of opinion provided by the previous auditor, and the date of that report. If the corresponding figures are unaudited, then another other matter paragraph. Just take note, you provide an other matter paragraph in a comparative information. In a comparative information, you provide other matter paragraph, whether that is comparative FS or a corresponding figures. Depending whether it is comparative FS or comparative figures, still other matter paragraph. Audit opinion on group financial statement. Audit opinion on group financial statement. So what is this group audit engagement? So in a group audit engagement, we have here different components. So we have different entities. So different entities composes the group. So let's say entity 1, entity 2, entity 3, 4. Those composes or those items composes your group. So this group FS, of course, will be presented into a 1FS. So we call that your group financial statement. So in a group financial statement, generally, we have your group engagement team, and then we have your component auditor. Group engagement team and component auditor. So who is the group engagement team? So that is the one in charge over the group FS. And the component auditor is the auditor of the entity itself. Let's say entity 1, the auditor of entity 1. So how will we use the work of the component auditor? So in using the work of component auditor, the group engagement team must obtain an understanding over whether the component auditor understand and comply the requirements relevant to the group audit and is considered independent. Whether also the component auditor is competent. Also, whether the group engagement team will be able to be involved in the work of the component auditor, and whether the component auditor operates in a regulatory environment. How about your group audit opinion? Always remember that the group audit opinion must be uh, under the group engagement partner. So the responsible here is the group engagement partner or the firm itself. The group audit opinion shall not refer to the component auditor. Why? Because you assume that the whole audit opinion was made by the group engagement team. So the group engagement team shall evaluate whether there is a sufficient appropriate evidence that the audit procedures performed were proper in the consolidation of the whole group, and the work performed by your group engagement team was proper, and the work performed by your component auditors. Why? Again, we will consolidate the different entities into a group FS. And the one responsible here is the group engagement team. Just remember that each entity, we have a component auditor. You just determine whether the component auditor is really competent and if ever still independent. And on your audit opinion, once you consolidate now, you just provide if ever there were proper, sufficient, appropriate evidence as to the work performed by the component auditor and the group engagement team in the consolidation of the whole group FS. So that is what is to be considered in the group audit opinion. So again, the group engagement team together with the group engagement partner should evaluate the effect of the audit opinion over the misstatements, whether identified by the group engagement team or those communicated by the component auditors, and whether there's an inability to obtain sufficient appropriate audit evidence. And based on those, you can either modify or provide an unqualified opinion. Just remember, in audit opinion on Group FS, there are different entities audited by component auditor, and there is now a group engagement team to audit that Group FS, which is already consolidated. And based on those info, you can either qualify or modify your audit opinion or provide an unmodified audit opinion. So that's it for our audit reporting.